year has been phenomenal. Revenues grew more than 50%, which is a phenomenal result, made up of both organic, like-for-like organic growth and acquisitive growth. And it's all driven by this huge trend for digital transformation, both in the commercial sector as well as the public sector, obviously where we're strongest. And that's not going away anytime soon. This is something that's going to ride out for, a decade or longer as organizations move from old systems to new modern cloud-based systems. But obviously the big story of the year has been our move from the Panoply to TPXimpact, the integration of our businesses and the opportunity that then gives us to scale from the 100 million run rate that we've achieved a year early towards becoming a multi-100 million pound a year company in the future. So we've progressed against our growth strategy by achieving both organic like-for-like growth as well as obviously acquired growth. On an organic like-for-like basis, we're pleased to have built 18 customers, more than £1 million in the last 12 months in last year versus 11 the year before. So real sign that we're getting those bigger contracts that we've always aimed for. And then from an acquired perspective, made 2 acquisitions in year and 2 that closed immediately post-period end. So one of them, Nudge Interactive, which was a company that put us into the pharmaceutical sector. We've been looking to grow our commercial sector business as well as our public sector business, so that kind of helps with that. And then Red Cortex, an acquisition down in South Wales, which is a Microsoft partner, and puts us in that kind of Office 365, SharePoint, Power BI kind of space, and gives us some great relationships that we can leverage even further. So 2 good acquisitions in year, and then the ones post-period end, Peak Indicators and Swirl, focusing on open data, on data engineering, data analytics, and machine learning.
It's been an incredibly strong financial performance for the business again this year, with revenue up 58% to 79.7 million. Particularly pleasing is that we've seen organic growth above our stated ambition of 10 to 15% in the year. Adjusted EBITDA has increased to 12.2 million from 7.1 million in FY21. We achieved our first statutory profit after tax, although we do continue to believe that an adjusted profit measure is more representative of our underlying performance. Our adjusted profit after tax for the period was 8.7 million, increasing from 5.2 million at FY21. Cash conversion remained incredibly strong at 110%, and cash at bank at the end of the year was just under £8 million as at March 22, with an adjusted net debt of £10.1 million. We're really pleased to declare a final dividend, subject to the publication of our statutory results, of 0.6 pence per share for FY 2022, which follows the interim dividend of 0.3 pence per share paid in January. Alongside our financial progress, we've also seen really strong performance in our ESG metrics. We have 3 tiers to our programme, one around people, one around planet, and one around community. In terms of people, we've launched our new employee value proposition, which delivers increased benefits to staff. We've launched employee resource groups for women, LGBTQI+ employees and minority ethnic employees. We've also launched a board mentoring programme focused on connecting diverse future talent within the business with a PLC board mentor. In terms of planet, we have launched an internal carbon tracker, and we've run our first climate philanthropy festival in the period. In terms of communities, we've kick-started 737 careers with future-proof skills, and we've donated 1,970 hours to community action programmes. In recognition of this, we're delighted to have been awarded the ESG Company of the Year and Diversity and Inclusion Company of the Year at the Small Cap Awards earlier this month.
Well, we made the decision to change to TPXimpact because we'd reached our commercial goal of reaching 100 million run rate revenue about a year ahead of plan. So the goal was to get there by March 23. We got there by March of 22. And we were thinking about how do we set ourselves up to be a multi-100 million revenue company in the future. The reality was our small companies that we'd acquired in the journey had minimal infrastructure and back office and processes to enable them to scale. Largely, they topped out in terms of where they could go to next. And so what we had to do is to make that bold decision to pull all our companies together under a unified brand, but also under a set of unified processes and underlying systems to really enable that growth in the future. The implementation has been pretty challenging, and our people have worked really hard to start to make it happen. The impact of that has been that Q1 top and bottom line have been a little bit challenging, but we're beginning to see the recovery of those numbers into Q2 already. And the most exciting thing is our clients are really excited about what we're doing. I've met a number of our biggest clients this week, and they're really interested in how we're able to help them more than we have done before, which is what this whole thing has been all about. And as a consequence of that, we feel confident in our ability to hit the numbers and the expectations for the year. So the macroeconomic conditions. So firstly, from a demand side and revenue side, government spend on digital transformation went up 9.9% last year, and it's forecast to continue to grow into this year. We continue to see huge demand for digital transformation in public sector and other sectors, actually, as we grow our commercial sectors as well. So I think that sort of transcends some of those other issues that are going on in the marketplace. From a cost perspective, bringing our companies together has enabled us to unlock greater productivity gains. The fact that we can now really get down into project profitability and begin to understand that, the fact that we can unlock greater utilization amongst our people sort of offsets any kind of inflationary pressures that we've seen as well.